morning. Welcome to Market Day Report. Welcome to a Tuesday. We're so glad you let us be a part of your morning. And we've got a little special guest. He's a special guest. You'll know who he is. Chris Swift is sitting beside me. We'll join Chris in just a moment. First off, let's jump into the markets. And the corn market still in the red as we check it here, as the December down one tick at 429 3/4. The March contract seeing a little more activity at 441, down 1 3/4 cents. What about the bean trade? You know, beans have been down 21% year to date after having positive week over week and month over month gains. 2.5 lower on the front month at 10.09 1/4. Deferreds are 8 to 10 1/4 lower. Wheat market, let's start in Chicago. July down 7, 591 1/4. We've lost the 6 handle there. Hard red, July contract 583 3/4. That's down 7 3/4. Far enough now you can't even smell the 6 handle. And spring wheat, Minneapolis, December contract 588. It's off 4. In New York, cotton futures are lower as well, down a half penny on the December at 69.19. And let's look at this one. We've taken out some more highs in Bitcoin as we've now hit up over 90,000. This market, week over week, up 25%, up 36 month over month. And what an investment. If you made it a year ago, it's up 135%. Chris Swift's with Swift Trading. Okay, Chris, if you were looking in the rearview mirror, that Bitcoin would have been a pretty good investment, right?
Absolutely. You know, we look at hindsight quite a bit because it's always 2020. We can clearly see what should have been done. And we notice that most specifically in the U.S. dollar index and interest rates. And we have seen over the since the 1st of October, we have seen the U.S. dollar go up immensely. We have seen the interest rates go up immensely, which bond and note prices go down. And then when the election came out, Trump was elected, both of those markets continued in that direction. That was the direction the market wanted to go in to begin with. And so it had follow through with that. And when you associate to what is taking place, you have to believe that this is in aspects of calming inflation down. Higher U.S. dollar keeps more product domestically here for our usage, and higher interest rates makes everything higher in order to be able to either borrow money to produce something. If you want to go buy a car, whatever it is, interest rates are really still very high. As a matter of fact, they're the second highest that they've been since about a year and a half ago when we made the first bottom.
So we talk about the FOMC. When we talk about interest rates, we picked up a cut last week. Already looking towards the next FOMC meeting. Will that play a role in any of this?
I'm sure it will, because all it's really doing is widening out the profit margin to the banks. So the banks borrow at 1/4% lower. We've seen the bond market and the note market, for which they pretty much use the interest rate off the 10-year note to gauge what they're going to do, retail note prices. Those bond prices have been going down and note prices, so interest rates have been going up, creating a wider spread margin for the banks in there. So banks are doing fairly well, I would have to say, right now in that ability. But again, it's keeping that back end higher towards the consumer there, trying to curb that inflation.
All right. Speaking of spreads, we'll come back and talk spreads in livestock futures. We're coming back. Market Day Report continues after this. All right, welcome back to Market Day Report. All right, we're looking at livestock futures. We've got Chris Swift with us. And Chris, just before we took the break, we were talking about spreads. I want to bring up one right now, and this is lean hogs. Looking at the spread from the front month to that end, I say the end month, it's the end of our table here. But December hogs, up over $1.05 now at 82.82, and look at the spread between that and the June contract, 99.62. That's up 17. That's a pretty wide spread when you look 6-7 months down the road. Is there anything we can pull from that when we see prices that much higher in the future?
Well, it's kind of interesting because when you talk about that, you have to know where the cash market is. And the cash market's right a little above 90 right now on the lean hog index. And that's what the futures are settled by, is the lean hog index. So when we see the spreads in the June months, June, July months, they're about $9 negative. Right now, they're higher than what the cash market is. When we look at December, it's on a positive basis, about $7 in difference in there. It's not uncommon to see premiums in the summer months where we tend to use a little bit more what they call the bacon and tomato sandwich trade. And so it's not uncommon to see that. Towards the wintertime, we do a lot of hams. We have a lot of hams, and so pork can be a little bit elevated. And we can see that right now in the cash markets. It's trading higher than what the futures are. Once we get through probably the third or fourth week of November, all of those ham purchases are made, and then we begin to kind of taper back off again a little bit.
Okay, let's tie this back over to cattle now. We're watching higher show list, Texas, lower show list in Nebraska and Kansas. Looking at our live cattle futures now, and we mentioned live cattle because that is tied back over to the cash cattle side, and November feeders are 65 higher at 246.80. The January at 243.47. That's up 122. And then on the live cattle, let me see if I can find the live cattle, 70 higher on the December at 184.40, with the February 62 higher, 186. And again, those deferreds, 180, 181. What can we pull from that? And the idea of cash cattle.
Well, we sold off pretty sharply last week on cash cattle and boxes. So both of them a little bit softer. Now we're trading back a positive basis. The cash market is trading higher than what the futures are. So at any given time, the futures could rally and say, oh, all we're doing is converging basis. What's really interesting is that forever we held such a huge premium in the feeder cattle market over what the index was trading at, and now we're at a discount. The biggest benefit comes to the cattle feeder. I can buy cattle for cheaper out into the future than I ever could before now. So it's always whatever the sun shines on one dog, it shines on another too. So
there you go. What was it? Sun always shines on TV too.
That's right.
I think that was a song back in the 80s, but that was a few years ago. So glad you're with us. Chris Swift is with Swift Trading, and it's kind of how we start your morning here on a Tuesday.
Yeah, already exciting. Good to have you guys with us with that update. Thanks so much.